Stocks, bonds, commodities, and the dollar all steady, but crypto giving some traders new reasons to worry. Right, majority of markets yesterday was quite boring, mostly driven, of course, by the thin liquidity with parts of Asia closed for Lunar New Year and the US markets closed for President's Day. Looking at equities, global shares have steadied somewhat after last week's dip. Europe got a bit of support yesterday from a rebound in banking stocks, which was, of course, hit when AI worries spilled into financials. For US futures, they did very little for the most part. The bigger focus was actually Japan, with the Nikkei pulling back after Japanese Q4 GDP data came in well below market expectations. I think it was a good reminder that the Japanese equity rally has been mostly driven by fiscal policy hopes rather than economic momentum, but it also further strengthens the case for more fiscal stimulus. Now, over in FX, the dollar saw some stabilization, edging up a touch versus the yen, of course, following the Japanese GDP data, but direction right now is still hesitant with rate cut expectations sitting in the background. I mean, while markets still lean towards cuts for the Fed this year, it's hard to get a sustained dollar rally without a fresh upside surprise in US data. Now, over to commodities, gold and silver remain choppy. Now, a lot of traders got very excited yesterday when Bloomberg reported that someone in the options market bought a call spread of about 11,000 CME contracts that pays off big if gold finishes the year between 15 and 20,000. Now, even though that sounds like massive exposure, with gold around 5K and implied volatility at 24%, those strikes are so far away that the price they paid are probably quite cheapish, which means it's basically more like a lottery ticket. So yes, if gold reaches 15K, they make a lot of money, but that would require gold to triple in value from here before December. Now, over to crypto, Bitcoin is drifting lower after the recent bounce. For many traders, the 60K level is a major focus point right now. According to Bloomberg, a lot of Bitcoin-backed loans will be required to sell Bitcoin collateral to cover losses if we break below that level. And at the moment, there is a huge pile of options that are basically betting on a break below that 60K level as well. Now, a big drop that causes forced deleveraging and hedging could spill into other markets, so it's definitely something worth watching. Now, for the day ahead, the main highlight is Canadian CPI data due later during the US session, and after the bank holiday, of course, price action will be interesting to watch as well. Happy trading.